So prior to making an investment, you need to identify at what point does this play become a loss? At what point does this play become a loss for me? If you do not understand that, then you don't know when to get out of the play. So the market goes up 76% of the time. So the goal for me is always to put the game in my favor. So I teach us that, let's put the game in our favor. Because when you don't put the game in your favor, now you got to work extra hard. I'm not saying that playing puts and shorting the market is not good, but I am now playing in the favor of the market. Y'all with me? Again, I'm not saying don't do it, but my strategy is to always put the game in my favor. That's how I win a lot of times. So last week, short sellers made $10 billion in a 6-week time frame, 6-day time frame. Now watch what I'm about to tell you. You always get a better vision of the game when you zoom out. This is about to make sense. This is going to be a beautiful thing. It's going to be a beautiful story that I want y'all to get. I am not saying do not short the market. I am not saying don't play puts. I am not saying that because there's a lot of money to be made there. But you have to really be on it because those events don't last long. Whereas the market goes up 76% of the time. So if I ask you a question, which one is in your favor? The market going up, right? All right. So people made $10 billion last week. Short sellers made $10 billion last week. Go to the next slide, Tootie. All right. The most shorted stocks this year is Nvidia Nvidia. Somebody gonna hear me say that and take that clip and be like, how you gonna teach y'all something? He don't even know how to pronounce the damn thing. Somebody gonna produce that and their whole crowd gonna be like, that nigga don't know nothing. Dang. Nvidia, 1.3% short. That is huge with that float. Microsoft, 0.75%. Apple, almost 0.75%. Tesla, 4%. Let's go a little further to it. Meta, 1.3%. Amazon, a little more than 0.75%. Exxon, almost 3%. Alphabet, right at 1%. That is a lot. That is the biggest companies in the game right now. Let's go a little further. Right? Year to date, this is how much short sellers have lost. $7 billion on Nvidia. $3 billion on Meta. $1.7 billion on Amazon. $1.1 billion on Microsoft. That's just from January to now. So my question to you is this. How does the $10 billion look now? They on that what? I need my lick back energy. And they on that I need my lick back energy. Go a little further to it. So watch this. Tesla and Apple have been the only two stocks that the short sellers have sold and made money on this year. But let's zoom out a little bit further. Since Tesla's IPO, short sellers have lost $75 billion. Since the IPO. They've only made money 2 years since the IPO of Tesla. Think about that. Since the IPO, you've only made money 2 years. You've lost $75 billion in total. From year to date to now, short sellers have lost $52 billion overall shorting the market. So having a $10 billion week last week doesn't compare to you losing 50-something billion dollars from January to now. You're on there, I need my lick back energy. So I want y'all to understand, I'm not saying you can't play both sides of the field. But what I'm saying is you got to be really good at playing that game. I'm always about putting the game on my side. I'm always about saying, yo, if the market going down, I don't gotta really play puts. Guess what I can do? I can take some cash from the positions that I have and I can just sit on the sideline. I'm all right with that. That may not be everybody's strategy, but I'm all right with that. So when we playing a game, I want us to be able to understand where we at. We making sense? We trapping? All right, let's go a little further to it. So the reason why this episode is understanding your financial blind spots is because of situations like this, right? So Kathy Woods from 2021 to 2024, her fund went from $61 billion to $11 billion. I'll say that again. From 61 billion to 11 billion. In 2021, she peaked at 21 billion in assets under management. Now she has 11 billion. Go a little further to it. So year to date, the ARK is down, ARKK, that whole fund is down 15.1%. It has underperformed the S&P 500 the last 3 years. Let me go a little further for you because I wrote this down. And this kind of blew my mind. Now, I'm always hesitant about talking about Kathy Woods because I never wanted to be like I'm talking about like a woman. That's a fine line that you gotta play, and I always gotta back it up with a lot of stats. I think she had an amazing year. I think she did some amazing things when she bet on Tesla when nobody else believed in it. But she said some absurd things that I don't agree with. She said that Tesla will be a $2,000 stock by 2027. I don't see that. Maybe she sees something that I don't see. But the stock is right now about $130. So what does she see between now and then? I'm not a mathematician, but that's a huge upside. Especially with more competition coming in the game. But I looked at her track record for some things, and I didn't agree with that. So, and I want y'all to understand that this is how some people are running their companies that are managing your money. So, Kathy Woods sold, I wrote it down here. Okay, cool. Kathy Woods sold a total of, right here we go. In Q1 2024, Kathy Woods sold 54% of her NVIDIA holdings, 54%, at $724 a share. She sold roughly 76,000 shares. No, she sold 81,000 shares. In Q4 2023, Jose, she sold 76,000 shares at $463. In Q3 2023, she sold 70,000 shares. In Q4 2022, she sold 109,000 shares. Her average price of buying was $81. So she's been in this stock since 2016. By selling so early, she missed out on $700 million in profit. That's a net gain. She made a net gain from 2016 to the time she started selling. She made a net gain of 880%, which is good. So she bought the stock. Average price was $81. That's amazing. But how much upside did she miss out on? The problem with that is 4 of her top 5 holdings are down double digits. Go further to it. Let me see if we got that one. There we go. 4 of her top 5 holdings. So Tesla down 41%. Roku down 33%. Square is now down 4%. I have a problem with that. Path is down 4%. The only thing she has up right now is Coinbase. The problem with that is she's bet so far into the future when you get out of a company that's running.
What's good, trappers, man? It's your boy, the Wall Street Trapper. Right now, I want to invite you to an amazing experience full of value. That is my community, Trappers Anonymous. It's 100% the greatest fundamental investing community on the market. Listen, your portfolio should be a masterpiece. And the only way we get you there is if we help you to learn how to invest with confidence. Now listen, I get it. Like, you don't know a lot about stocks, or maybe you've heard people say how much money they lost in stocks, but I can guarantee you, one, because they weren't in the community, and two, they lack the information. Our goal in Trappers Anonymous is to help you, really to hold your hand on the journey to becoming a confident investor, learning how to navigate through the different events that the stock market goes through, to take you from panic to encouragement. There's no better time than now. This is an opportunity only for those who are willing to be on the journey. So listen, man, click the link below. Come join me in Trappers Anonymous, man. I will see you in one of our many classes, whether it's Moat Monday, whether it's the 2-hour class we do on Sunday, or whether it's just a book club. Everything is geared toward making you a better investor so you can triple your net worth and turn your last name to an asset. It's your boy, Wall Street Trapper. See you in the trap.
There's 5 rules that I wrote down for you. I want you to write this down. It says, don't risk capital that can break you. You should not invest, take that off the screen. So you should not invest money that you feel gonna break you. That if you lose that money, it does something to you. Because if you invest in money that will alter your financial state, then that's money that you don't need to invest. Does that make sense? The next one is create an idea and let the idea play out. The reason why we say that is you have to, what did I say earlier? You have to have what? A story before you make an investment, right? Because your story allows you to what? Understand when to go in, when to get out. Let the story play out. Let the story build. Am I making sense? Next one. Identify when the loss happens and when it's time to cut it. So prior to making an investment, you need to identify at what point does this play become a loss. Does that make sense? At what point does this play become a loss for me? If you do not understand that, then you don't know when to get out of the play. And you're letting the price tell you. And the worst thing that can happen to you in this game is when your emotion, watch this. How many of y'all, when the market was going down last week, you kept looking at your phone? Yeah. And every time you look at it, you get madder. Looking at it again. Oh, what? There we go. There we go. Good looking. Right? Oh, my line ain't cold-blooded on that picture, boy. Dang. Right? Poke holes in the idea. So any idea that you have around an investment, that was my number 2. It was create an idea, but I forgot to add poke holes in the idea. One of the things I talk about is we'll look at an investment, and when we're looking at the investment, all we see is what's right about it. You with me, Queen? She was like, yeah. Yeah. All we see is what's right about it. The problem with that is we haven't looked at our what? Financial blind spot. Come on, I'm wrapping that around everything right now, y'all. We ain't looked at the blind spot. And the minute you don't look at the blind spot, what happens? You get in an accident. You ain't adjusting the mirrors, y'all. Right? So poke holes in it. One of the things, Lieutenant Casey will say this, before we get into any buying holes, we find reasons why I don't need to buy it. If I haven't found a reason why I don't need to buy it, I need to do more research. Because that means I'm overlooking something. Because every company has flaws. And if I can't identify the flaws, then I haven't did enough research on this investment. Does that make sense? All right. So next, we identify when to cut the loss. I go into everything. My rule is 50%. I know when it happens. Now, if I'm in the trade and I wind up doing it before that, I'm cool with that too. Because evidently I saw something, but in the moment, I need to identify the loss or when it becomes a loss before I even get into it. How many people truly put a loss in play before they get into the play? Nobody. One person, my OG back there. You know why people don't want to do it? Because they don't want to even wrap their mind around this thing going wrong. That's why you don't do it. That's why you don't want to talk about a funeral. Dying, ain't nobody about to die, you tripping. I don't want to talk about no funeral, no plot. So nobody wants to talk about when this thing becomes a loss because we don't want to put in our mind that this play could be a loss.